Today is Thursday, August 15th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Kevin Merko will share their expert opinions on today's show. But first, let's see where the red markets stand. The cryptocurrency index, CCI 30, has plummeted sharply towards the 3,300 point territory. It is down by 13% so far in August. The year-to-date gain has eased back to just over 50%, and the 30-day Bitcoin Volatility Index continued trending south towards the 4% mark yesterday. The recent market turbulence is likely to actually drive it higher in the next coming days. Now, trading activity has increased as the markets have indeed dropped today. The CoinMarketCap website's daily traded volume indicator jumped above the $70 billion level. The Messari website's real-time indicator is rising towards the $3 billion mark. The market share of Bitcoin has increased by approximately 1% over the past 24 hours. The Bitcoin dominance indicator stands at more than 68%. The top 5 digital assets are all trading in the red. Bitcoin has plummeted below the 10K resistance level on a daily decline of 6%. Ether trades at slightly more than $180 on a double-digit drop. XRP has plunged further below the 30-cent mark as it trades 10% in the red. Bitcoin Cash steps south of the $300 mark for the first time in August before reclaiming this ground. Litecoin is now down by nearly 50% from June highs as it trades at $75. The Coin 360 heat map shows a sea of red here today. The stablecoin Tether stands out as one of the only green spots today. Now, according to the token spread website, arbitrage has increased to nearly 2% for the Bitcoin dollar pair. It is posted between the BitMEX and XMO exchanges. The biggest spread is on the XMO marketplace. Today, we will review some of the characteristics of Content Box. The project looks to empower a decentralized digital content ecosystem by creating a blockchain infrastructure for the digital content industry. A shared content pool, a shared user pool, and a unified payout system will be the 3 main features of the platform. The ecosystem will be functioning on its native token called Box. Its price peaked at 4.5 cents in July of last year, and currently it can be purchased for just slightly more than 1 cent. We will now review the performance of the 5 major cryptocurrency asset classes as grouped by the Messari website. The infrastructure group is down by 10%. All of the top assets are trading in the red by double digits today. The media and entertainment category is the most bearish group today as it stands more than 11% in the red. Steam is the top decliner with a 15% drop, and the financial sector has declined the least, trading less than 8% in the red. Now, the currency category posts a drop of 9%, and lastly, the services section is down by 8%. This is, of course, where the 5 major cryptocurrency categories stand so far this bearish Thursday. We will now focus on the most significant moves among the top 100 cryptocurrencies, and you know that it is a rough day on the crypto markets when stablecoins are among the top gainers. So we will then be back with our crypto experts after this short break, so don't go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We are now joined by Kevin Mirko, the CEO of the Coin Metro Exchange, and Jason Fernandez, COO and co-founder of AE Token. Guys, welcome back to the program. Great to have you. How are you doing today?
Excellent. How are you doing?
I'm well, thank you. Jason, we will come to you first because volatility is back on the markets. First, Bitcoin dropped below 11K and the decline has, of course, continued. The 10K psychological level failed to hold and the top crypto trades in the 4-digit territory. So were there any particular drivers for this bearish move?
So I said yesterday that things were looking bearish and that the charts did signal a move downward to the 10K support. And that's exactly what happened. 10K did fail to support, to hold for a while, but now we're back. We're back above 10K. It's probably like 10,100, something like that. I think one of the main reasons, as I said yesterday, was it has something to do with the U.S. deciding to withdraw additional, not put on additional sanctions on China. And that would normally be good news for the market, but bad news for Bitcoin. In this particular situation, though, there seems to be bad news going on all around. I mean, we know that the Dow suffered some of its worst performance this year. It dropped something like 800 points. And usually in situations like that, investors would flee to things like traditionally safe haven assets like gold and, what's now considered, starting to get considered a safe haven asset is Bitcoin. But we didn't really see that much respite from the markets with anybody who moved to Bitcoin. And I think Bitcoin fell something like 7%, barely holding on to 10,000. And gold also, I mean, it popped up a little bit, something like 1%, but it is down overall over the last, compared to the past few days. So it does seem to be somewhat odd. And I think Bitcoin is somewhat tracking gold even now. I mean, we would have expected gold to fall maybe a little bit or maybe advance somewhat more, but it's only something like 1%. So it seems to be tracking still.
Okay, then, but definitely, I guess Bitcoin is reacting to what's going on. I guess, like you said, you mentioned Dow Jones, so what is going on in the world right now? So, Kevin, we will come to you. What did you pick up to be one of the most actually bearish drivers here?
Well, I think in all markets, outside of really severe fundamentals, and while we see a lot of things happening around the world in Argentina, in the US, China, et cetera, these things happen in the course of business with countries. This is not something new to markets. It may be something new to a maturing crypto market, but if you've traded any market for any amount of time, these catastrophe situations, how they usually get labeled in the news, happen all the time. So I think that when it comes to Bitcoin, to me, what moves markets is price action. And so whether you have a fearful market or a greedy market tells you which way it's going to move. When markets get fearful, they fall. When they get greedy, they rise. That's it. Now, there are catalysts that will push markets in one direction or another. I think that the safe haven aspect of Bitcoin, in order for an asset to be a safe haven, the majority of the investors that invest in it or buy it need to understand what a safe haven is. And I still think we're a majority retail-driven market. And even though retail guys now have more access to information, Twitter and Facebook and all these different sources, it's obviously not all legitimate information. So that means that this is still going to be mostly a fear and greed-driven market. So as things start to fall, whatever the initial catalyst is, whether it's some whale making a trade, whether it is some news event that pushes a group of traders to make trades at different exchanges, what happens is you get that catalyst pushes a domino effect, and now you have a fear-based market. So we're sitting in a fear-based market. That's it. There's lots of fear going around. In any other market, a more mature market, if this was a safe haven asset, fear in let's say at the government level, fiat at trade levels would make Bitcoin rise, because people would be pushing money into a safe haven asset. That's not happening. So that tells me that, one, it's not a safe haven asset, and two, even if it is, the majority of people trading it don't know what a safe haven asset is and what it's there for, which means they're retail.
I think it's interesting, you say, well, actually, it's not a safe haven asset, because right now this idea of Bitcoin being the safe haven asset, it's floating around. People are discussing, whether it is or whether it isn't. So interesting, just to hear your thoughts there. And I guess, like you said, this is very normal with any kind of market. Now, just moving on, because the US stock market dropped yesterday. Many have actually been calling, like I've mentioned, Bitcoin a safe haven asset. So, Kevin, we will stick with you for the minute. You were like I said, you're not one of those people. So was this an example that it is not entirely a safe haven asset at this point? Or do you think actually it's going to get there? It's just a matter of time?
I think it can get there. But to get there, it needs massively more liquidity behind it. It also needs to get a more diverse group of traders behind it. It can't just be either majority retail driven, or even if it's 50-50 retail and institutional. Right now, most of the institutions, while there are some very big institutions that are sitting on Bitcoin, in terms of the tradability, you don't really have that many true Bitcoin desks. You don't really have big banks trading Bitcoin between one another. So the stability you need for something to be a safe haven asset simply isn't there yet. Can it get there? Sure, it could. Are we there now? I don't think so. But it's, for me to define Bitcoin is it's still difficult, regardless of what the price point is. Until, to define it as a currency is difficult because it's volatile. To define it, and for the same reason, to define it as a safe haven is difficult. It's a non-correlating asset. And that's the reason why, if you ask any institutional investor why they're interested in Bitcoin, that's going to be top on their list, whether it's number 1, 2, or 3 on a top 10 list, or maybe they don't even have 10 reasons, maybe they have 5. But definitely one of the first reasons is going to be it doesn't correlate. And that's hard to find in markets. Usually, whether it's gold, whether it's silver, whether it's commodities like cattle or corn or whatever you happen to trade, they usually correlate to other markets. If you look at things like the Australian dollar, that correlates highly to gold. If you look at something like the Japanese yen, tends to correlate in exports, and it correlates a lot with, let's say, auto manufacturing and things like that. And that happens because those are considered commodity currencies. They're tied very closely. They correlate very closely, whether it's negative or positive correlation, with some other asset. And Bitcoin doesn't do that for the most part. You can correlate it to macro news events, maybe. But what you have to remember about traders is when something happens, traders are like 5-year-olds. They want to find a reason why it happened. And if you're looking for a reason, you will find one. So, every time I go on Twitter, I see something like the Dow fell 800 points and this means that, or this means it. Not necessarily. What you really need to think about is psychologically what makes people trade. And if the Dow falling 800 points makes 80% of retail-driven traders trade, then there's your correlation. It's just the fact that it's a swarm. It's basically all these people doing one thing at one time. It's sheep following other sheep. It's not necessarily the news event that actually drove the market price in one direction.
But I guess, in your opinion, in order for going back to that whole idea of a safe haven asset, in your opinion, more liquidity and more diverse traders are essential. I guess it can't be a safe haven asset for you until there's some stability, and that's certainly not what we're seeing. So, Jason, your thoughts on this safe haven asset topic here? Is it a safe haven asset topic? Is it now an asset now, or do you think, well, actually, it could get there? It could be a safe haven asset eventually.
So the reason it's being called a safe haven asset is because it's non-correlated, as Kevin said. And that's not a question of opinion or discussions back and forth. It's essentially just been proven out by looking at the markets over the past several months. And that's something that Anthony Pompliano pointed out a few weeks ago, actually. So there's not a question, at least thus far, it's been mostly non-correlated. Today, past couple of days, has sort of been an exception to this because obviously the financial markets all over are down. One of the interesting things is that we talk about safe haven assets like gold. Gold is considered a safe haven asset, and we do see a fairly high correlation with the way gold is behaving. So, for example, gold rallied something like over $100. It put on over since the start of the month, and essentially just recently it's seen a rejection of that and somewhat retraced something like 50% of those gains. Bitcoin, meanwhile, rose from something like 10K to 12K. And then erased all of those gains. So while gold only erased 50% of those gains, Bitcoin basically erased all the gains it got over the last month, let's say last few days. And on the other hand, Bitcoin's rise over the last several recent months has also been much faster than gold. So that greater dip could be a reflection of that. But the fact that these two assets are correlating even in a situation like this, that does seem interesting to me. It does seem to me, somewhat reinforce the whole concept that Bitcoin is a safe haven asset, because certainly people consider gold a safe haven asset, and there does seem to be some sort of relationship between gold and Bitcoin, and at least the way they've been behaving.
But we are seeing a different picture in Argentina, because Bitcoin is trading at a premium on this market as people are looking for refuge from the devalued pesos. So, Kevin, we'll come back to you. Why is this different then? What is happening?
Well, if you ask me, that's more of a hedge rather than a run to safety. So while some of those people may view that as a run to safety, I guess if your currency falls by 30 to 40% in one day, and this isn't the first time or the last time that's going to happen around the world, then yeah, it's a run to safety. They're looking for something that either looks like it's going to retain value more. And to be honest, in comparison to the Argentinian peso right now, putting their money in rubber bands would probably be better than leaving it in Argentinian peso. So the fact that they have an alternative means they're rushing to that alternative, but it's a hedge. It's a hedge against possible further devaluation. It's not so much that I think they think that their money is going to be, if they put in X amount today, it's going to be X tomorrow. They're probably actually hoping that it increases in value. But in reality, they just don't want to see the correlating devaluation. So it's pretty obvious, according to how the market looks now and historic markets for Bitcoin, that Bitcoin isn't going to have the same tendency to fall 30 to 40% based on news that's only specific to Argentina. So that's why they're probably, to me, it's not, they can be, you can have an instrument that is a safe haven and is also a hedge. Gold would be Gold would be a good example of that. Now, you can ask me about gold. I think I told the story before. My grandfather bought gold in 1983, maybe for about $860 an ounce, roughly. I bought it in 2004 and 5 for $250. So you can debate as well whether gold is such a great safe haven asset. But generally speaking, over the last 100, 200 years, it's definitely held value better than any fiat currency. And you could probably say the same thing about Bitcoin in terms of value. But still, I think there's an element of volatility that needs to be discussed to get to that point.
Okay, but I think it's interesting. Well, actually, something can, if it's a hedge, it can still be a safe haven asset. And definitely an interesting story, when you compare how much your grandfather bought gold for compared to how much you bought it for. So definitely worth noting there. So Jason, we will come back to you. What are your thoughts with regards to Bitcoin trading at a premium in Argentina?
So that's a good point about gold. Yes, that's somewhat reinforces what I was saying. In as much as gold is considered a safe haven asset, it's been pretty volatile anyway. So the suggestion that just because Bitcoin is volatile, it's not a safe haven asset, this doesn't quite hold water. But yeah, the fact that you're able to buy gold much less, in 2014 than you were in 1983, that shows sort of the how safe an asset gold is. And certainly, like I was saying, Bitcoin does seem to be tracking gold to some extent, so that doesn't seem too far off. Generally, certainly in Argentina, Bitcoin was recently trading as much as $12,000 on local Bitcoins, and so that's something like over 10% higher than most international crypto exchanges. It's also trading at a premium of 4% in Hong Kong. Because of the anti-government protests there, so it sort of has proven to become to behave at least as an asset of last resort in areas of sort of currency devaluation and political uncertainty. So in the last week alone, Bitcoin is up approximately 50% against Argentine peso. And as Kevin pointed out, Argentine peso has been performed so terribly that almost anything would be a good sort of safe haven asset when compared to the peso. But the fact is that it still has provided that access to Argentinians who again want to hedge their best. They know that they think that that the peso is dropping and they want to make sure that they're not affected too much. And of course, Bitcoin, as Kevin rightly pointed out, I mean, things that are happening in Argentina are specific to Argentina, and Bitcoin is an international cryptocurrency. So nothing that happens to Argentina is going to affect Bitcoin at large, more than a few percentage, if at all. So that sort of is, I guess, one of one of the ways of thinking that's led to people sort of in Argentina putting money over there. But sort of the premiums would seem to suggest that the argument that Bitcoin is a means of protecting assets from plunges in local currencies and authoritarianism is sort of a good strategy. At least that's what the premiums would seem to suggest. But still, I mean, the cryptocurrencies, particularly Bitcoin, has doubled pretty significantly. So while it is a hedge, it hasn't quite maintained the value, as much as Argentina would probably, or even Hong Kong would probably like.
But you mentioned Hong Kong there, and it's definitely some kind of trend that we are seeing globally when it comes to political uncertainty. We've actually spoken about this on our show before, because of course in the UK we have Brexit coming up very soon. So I think it's a very exciting time just to see how Bitcoin will fare come October 31st. Now, just moving on, Kevin, we will come back to you. Barclays is no longer working with the Coinbase exchange in the UK. Now that there are reports that Santander UK has actually halted payments to Coinbase. So are these just separate cases, or is this part of a bigger picture?
Well, I think obviously anytime something happens in crypto, we all think it affects all of us, right? Here, I would say, look, when you think of banking for crypto exchanges, it's the same basic difficulties that you experience banking any company that basically accepts only third-party assets, holds third-party assets, and then the only money the bank really sees from these transactions is transactional volume. And we're talking about, for the most part in the UK, faster payments and probably SEPA payments. So the bank is making pennies, 30 cents, 25 cents a payment perhaps on a corporate level, maybe even less depending on volumes. And they have to take on every single risk that Coinbase has in terms of all their third-party clients. So I would assume that after being Coinbase's main banking partner in the UK for months and months and months, maybe almost a year now, maybe even a bit more than that, there's probably been specific instances where Coinbase has either been used by clients for fraudulent purposes, or there's probably been flags on money laundering, maybe some AML diversion from their policies, et cetera. And either there's unwillingness to change those policies, unwillingness to investigate, or they simply they don't have a system in place to fight the fraud that they're receiving. And the bank decides that the risk level is too high and they back out. And once you have a major bank back out, then obviously that hits the news wires. Any other bank that either deals directly or indirectly with that company is going to take a look at their risk profiles as well, because what the banks don't want, there's so much scrutiny on banks from regulators, from government right now, especially with big scandals like Danske Bank, HSBC, pretty much every major bank in the world has had some major money laundering scandal. And they're going to continue to come because money laundering is hard to stop. Let's just be blunt about it. It's not easy. So the problem is what they don't want is one client getting them flagged by a regulator or a government that gets them fined $1 billion or €1 billion. So they'd rather just give the client up. Doesn't matter how big the client is. They'd rather just kick them out the door rather than risk, even if it's a small risk, even if there's only 1% chance that it leads to a fine. They don't want the fine, so they kick them out. And I think that's what happens here. I don't think it's systemic. I don't think it's bad for crypto in general in terms of the entire market. I don't think the recent fall in Bitcoin has much to do with this. There's a few people that probably sold because they got antsy, but that's just the way any market works. I think this is a one-off situation with Coinbase, but it shows you that businesses, even regulated ones, because Coinbase is regulated, they have an e-money license in the UK, they have lots of licenses in the US at a statewide level. Even highly regulated companies can go outside of the framework, let's say the wire fence of what they should be doing in terms of AML, KYC, KYT, et cetera, and how important it is to make sure that you put your money with a company that actually follows those rules and follows them strictly.
Kevin, thank you very much for your thoughts there. Like you said, very interesting. Even a company like Coinbase, which has all of those regulations in place, there's still issues surrounding it. So finally, we will just finish with you, Jason, because we are slightly pushed for time. What are your thoughts for us, please?
So I do think that they are related. With regard to Santander, they have allegedly also blocked withdrawals from Bitstamp in Portugal and Spain. They actually did come out and say that they have not blocked deposits from Coinbase, and instead they've just sort of have an accelerated sort of extreme scrutiny program for certain transactions that they consider are could be fraudulent transactions. So apparently the thing with Santander is clearly related to concerns of fraud, and I would say that that is probably the same situation with Barclays and Coinbase as well. There are rumors that Barclays' risk appetite has contracted a little, and they may not have been really happy with some of the transactions that happened, and maybe some concerns about maybe illicit transactions on Coinbase, and maybe that's perhaps something that caused this. That is a rumor that it has something to do with that, and if that is the case, then that does mean that the Santander UK issue and the Barclays thing is connected. Also, if you look at their new bank, so Coinbase has a relationship with a new bank, which is known as Clearbank. Their new bank has also, well, they recently delisted Zcash, which has this sort of extreme privacy feature where they use zero-knowledge proofs to mask the details of transactions for blockchain watchers. And essentially, most people are suggesting that this has to do with their bank relationship with Clearbank, and that Clearbank was the one that was not too happy about sort of supporting or being in business with a currency, supporting a currency that had features that would make law enforcement essentially harder. So it does seem like all this is related, at least to some extent. What impact this will have? For the most part, this is sort of more of a PR thing. It was Barclays is one of the most prestigious banks, so to work with Coinbase is sort of give this cachet respectability. But in actual real world terms, it probably not make a huge difference. One of the main losses was that they lost access to the UK faster payment scheme, which enabled users to sort of instantly withdraw and deposit British pounds at the exchange, which is obviously extremely convenient for their users. But Clearbank is expected to restore that by the end of the third quarter. So overall, it's not going to end up challenging Coinbase users too much. But I do think that these are all related, and that to some extent they are related to questions of fraud, or at least problems with banks concerned about fraud, because clearly that's the case with Clearbank and Zcash. So it seems like there's some relationship.
Definitely think there is some form of relationship here. Guys, as always, it's been an absolute pleasure having both of you on the program with us today. Thank you so much.
Thank you.
Now, before we sign off, I do have a last-minute update from my editorial staff regarding the crypto market. The total market capitalization has somewhat stabilized to return back above the $260 billion mark. Trading remains active, and the coin market cap website's daily volume has edged further above the $70 billion level. Bitcoin has recovered some of the ground that it did lose earlier in the day to once again trade at more than $10,000. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin Mirko and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.